You won't need credit anymore to buy a house. Buying a home is a major investment, and the choice to do so shouldn't be taken lightly. It is not just a significant financial choice, but also an enormously emotional one. Anyone who has ever made an offer, been in a bidding battle, and either lost the property they wanted or won their ideal home can attest to the highs and lows of the process. Over the last several years, there has been an increase in uncertainty among prospective homebuyers. As a result of the widespread anxiety that COVID sparked about the economy, potential homebuyers delayed making purchases for a while. At some point in the future, lockdowns, remote work, and learning motivated many people to seek greater space. It sparked bidding wars and drove up housing prices, which were already high due to a lack of available homes on the market and historically low mortgage rates. However, there is now increased pressure on mortgage rates as a result of the Federal Reserve's decision to begin raising interest rates and the expectation that there will be 2 further rate increases this year. The monthly payment on a 30-year mortgage, on average, has been more than 7% throughout the entirety of the month of October this year. A year ago, interest rates were almost half of what they are now. The Mortgage Bankers Association found that mortgage demand is 86% lower than it was a year ago, and they expect housing demand to fall further until 2023 as a result of the increased cost of borrowing. However, we are now witnessing that bidding wars are decreasing and prices are falling. Considering all of this, you may be wondering whether now is a good time to purchase a home. Nowadays, the real estate market is a very terrifying place. We often hear dire predictions such as, the Fed will push until something breaks. The housing market is crashing. It'll be awful. This is going to end in tears. Such gloom and doom may cause apprehensive homebuyers to ponder whether there is any value or hope in the proceeding. However, if there is one thing that the COVID-19 epidemic has shown us, it is that things can change quickly, for the better or for the worse. Because of this, it is imperative that you keep your eye fixed on the most recent real estate data in order to maintain your sanity and get a head start on the impending housing disaster. Anyhow, this brings up today's main issue, which is, buying a house may have gotten a little easier. The Federal Housing Finance Agency, or FHFA, granted approval for 2 new credit scoring models to be used by Fannie Mae and Freddie Mac. These 2 government-sponsored enterprises, or GSEs, are responsible for guaranteeing the majority of mortgages that are issued in the United States. Both agencies have just been granted permission to make use of the FICO 10T credit score model, as well as the VantageScore 4.0 credit score model. This comes as an alternative to the traditional FICO scoring model, which has served as the industry standard for over 20 years. But the hope is that by including rent, utility, and telecommunications bills into the mix, these 2 new models will provide a more accurate picture of a borrower's financial situation. In addition to these new scoring models, the FHFA has also announced a modification to the rules that lenders must meet regarding credit reporting. At the moment, Freddie Mac and Fannie Mae require lenders to produce credit reports from all 3 consumer reporting agencies, which are referred to as TransUnion, Equifax, and Experian. Instead, lenders will only be required to disclose credit reports from 2 of the 3 agencies. Until then, you'll likely hear a lot of F words like Fannie, Freddie, and the Federal Housing Administration, and it may become rather perplexing at times. If you are thinking of purchasing a house, it will be helpful for you to be familiar with the following acronyms and what they stand for. This is particularly true if this will be your first home purchase or if your credit is less than perfect. What follows is a list of names to remember: the Federal Housing Administration, FHA, the Federal National Mortgage Association, FNMA, or Fannie Mae, the Federal Home Loan Mortgage Corporation, FHLMC, or Freddie Mac, and the Federal Housing Finance Agency, FHFA. Fannie Mae and Freddie Mac provide the same function for many sorts of lenders. Hence, they are sometimes lumped together and referred to as Fannie and Freddie. In other words, they help keep monthly mortgage payments reasonable. They achieve this by purchasing mortgages from banks and other licensed lenders and then packaging them as mortgage-backed securities. This allows them to get access to the mortgage market, also known as mortgage-backed bonds. However, when Fannie and Freddie acquires a lender's mortgage, it provides the lender with the capital, sometimes referred to as cash, that they need in order to be able to provide more home loans to a greater number of house purchasers. Although this is highly regulated, it still makes them significant participants in the banking and mortgage markets. But how big? They are currently one of the top 10 financial firms on the Forbes 500 list and one of the top 50 companies overall. However, now that it has been publicized, soon Fannie Mae and Freddie Mac will no longer accept homebuyers based on the typical FICO credit score that will soon be a thing of the past. On the other hand, the Federal Housing Finance Agency has revealed a new model that will make it feasible for a broader spectrum of borrowers to qualify for house loans. This comes after nearly 8 years of working toward a better solution. While it may take some time for lenders to adopt the dual score approach, it is intended to broaden credit availability and make it simpler for house buyers with non-traditional credit to obtain mortgage qualified. The mortgage business has a safety net in the form of Fannie Mae and Freddie Mac, which are government-sponsored firms. These enterprises guarantee the vast majority of house loans in the United States. For the last 20 years, they have employed the traditional FICO score to assess the creditworthiness of loan applicants. But traditional FICO, on the other hand, had a few blind spots that did not take into account the whole picture of an individual's financial profile. In the past, many people who wanted to purchase a house were turned down because their credit profiles didn't meet the requirements set out by the FICO scoring system. However, the new models are well-timed and will boost loan availability for low and moderate income households, first-time buyers, and minority potential buyers. Also, the new credit score model, including both FICO 10T and VantageScore 4.0, will incorporate previously unaccounted for payment records. The shift is considered a win-win for both borrowers and lenders, as it is likely to protect mortgages, lower prices, and make homeownership more accessible to more people. The new credit score models will provide increased accuracy and a more inclusive approach to judging borrowers, but their adoption is a massive transition that will take time and tight collaboration throughout the sector. Now, what this means for you, the house buyer? This should be a beneficial move for house purchasers and provide financing to a broader spectrum of individuals, particularly renters. In the near future, borrowers will benefit from a credit rating system that is far more fair, accurate, and inclusive. Those who have previously been ignored due to thin credit reports will be treated more fairly when it comes time to apply for a mortgage. Furthermore, regarding the ongoing affordability problems that home buyers face, the FHFA's targeted changes to the pricing structure of the GSEs are well-timed and will enhance loan availability for low and moderate income families, first-time home buyers, and minority purchasers. With the recently announced changes to credit scoring methods, more people will be able to qualify as a borrower, opening the door to home ownership for underrepresented populations. Therefore, apply as soon as possible rather than waiting. This adjustment should make home ownership more accessible to many people. However, implementation is anticipated to take many years. The good news is that aspiring home buyers with iffy credit don't have to wait until the new credit score model before applying. Despite it, there are methods to be accepted for a house loan even if you have a poor credit score or no credit history at all. Now, if you're ready to take the plunge and become a homeowner, contact a local lender now. Thanks for watching this video. I really hope you enjoyed it. Additionally, if you're new to this channel, I strongly encourage you to subscribe and click the like button. You can also keep up with all of my most recent videos. See you in the next one.